It's here. Bitcoin Halving 2024. Or as it was called in the old days, halvening. Bitcoin reached more than $64,000 on Friday, April 19th in the evening. The last times, investing in mining companies has also been profitable for people who did not invest in Bitcoin. But wait. What is Bitcoin? What is halving? What are miners? What am I talking about? Okay, let me explain. Bitcoin is a digital currency. That is, it has no physical form. It was conceived by the mysterious Satoshi Nakamoto, whose true identity remains unknown. True story. Bitcoin was designed to be a decentralized, peer-to-peer electronic cash system that operates independently of any central authority or government. The origins of Bitcoin can be traced back to the 2008 financial crisis, which shook the global economy and eroded public trust in traditional financial institutions. Nakamoto's white paper, published in 2008, outlined the core principles and technical details of Bitcoin, proposing a solution to the shortcomings of the existing financial system. The way this digital currency works is through using what is called a blockchain. You can consider it a digital ledger, where transactions are recorded. This blockchain records, stores, and verifies data, securely, through a peer-to-peer network and eliminates the need for intermediaries like banks or governments. Every transaction is recorded and stored in a block on the blockchain. It's like a spreadsheet or database where information is entered and stored. When a transaction occurs, such as transferring Bitcoin, it is collected along with other transactions. These transactions are entered into a block. Once the block is full, the information is run through an encryption algorithm, creating a unique hash, a hexadecimal number. This hash is then added to the next block, along with other data, creating a series of chained blocks. In Bitcoin's blockchain, transactions are permanently recorded and viewable by anyone. The data recorded in each transaction block of the blockchain include the digital wallet address of the person initiating the transaction, the digital wallet address of the person receiving the funds, and the quantity of cryptocurrency involved. In the early years, Bitcoin was largely unknown and traded for a few cents. But as the technology gained traction and more people became aware of its potential, the price began to rise. The first real-world transaction using Bitcoin was in May 2010, when programmer Laszlo Hanich bought 2 pizzas for 10,000 BTC, worth around $30. A transaction now celebrated as Bitcoin Pizza Day. When Bitcoin was conceived, it was made to not lose value because of inflation. Unlike our regular, government-controlled physical currency. As such, there was a limit to how much Bitcoin could be created. It was set at 21 million Bitcoin. No additional Bitcoins will be generated when the Bitcoin supply reaches its upper limit. It will be capped at that number. Nowadays, Bitcoin is not often used to make transactions, such as buying a pizza. As the value of a Bitcoin at the time of this recording is roughly 64,000 USD. Currently, it is mostly used as a store of value, similar to how gold has been used. The first Bitcoin transaction took place on January 3, 2009, when Nakamoto mined the Genesis block, known as Block 0. So, what is this so-called Bitcoin mining? The process of mining Bitcoin now puts mining companies, such as Marathon Digital, Riot Platforms, and Clean Spark, through a process where they use their computing capability to compete to solve complex mathematical problems. Upon doing this, they win the right to validate transactions and add them to the blockchain, called mining a block, and get paid in Bitcoin for their work. As the network has grown, the competition among miners has intensified, leading to the development of specialized mining hardware and the rise of large-scale mining operations. The price of Bitcoin has had a profound impact on the mining industry. During periods of high prices, mining becomes more profitable, leading to an influx of new miners and increased mining activity. Conversely, when the price of Bitcoin drops, like during halving, many smaller miners are forced to shut down, as the cost of mining exceeds the revenue generated. So, now we get to why you really came here. What is halving? The rewards that Bitcoin miners get paid for mining a block, that is, adding to the blockchain, undergoes a halving approximately every 4 years. The miners get 50% of what they previously received. After every 210,000 blocks, the block reward given to miners is reduced by half. It is programmed into the Bitcoin protocol. For example, the recent halving in April 2024 reduced the block reward from 6.25 BTC to 3.125 BTC per block. Halvings limit the new supply of bitcoins entering the market. With a fixed total supply of 21 million, reduced issuance can lead to price increases if demand remains strong. The halving events have also had a significant impact on the mining landscape. As the block reward is reduced, miners must find ways to increase their efficiency and reduce their costs to maintain profitability. This has led to the development of more energy-efficient mining hardware and the consolidation of mining operations into larger, more efficient pools. Only the fittest miners survive the halving of rewards and profit when Bitcoin surges, usually up to 18 months after the halving. The rewards paid throughout the halving so far. In 2012, the block reward was reduced from 50 BTC to 25 BTC. In 2016, the block reward was further reduced from 25 BTC to 12.5 BTC. 2020 saw the block reward decrease from 12.5 BTC to 6.25 BTC. And on April 19, 2024, the block reward was down to 3.125 BTC. If you look at the year after halving, in 2013, Bitcoin surged from $1 to its first major peak of $1,000. Bitcoin's price saw exponential growth in 2017 amid the growing popularity of cryptocurrencies. And by the end of 2021, Bitcoin was valued at over $60,000 USD, driven by increased institutional adoption and the launch of Bitcoin ETFs. After the 2012, 2016, and 2020 halvings, the Bitcoin price ran up about 93 times, 30 times, and 8 times, respectively, from its halving day price day to its cycle top. We are now at the 2024 halving and about to see what this halving will bring. Just as a heads up, there are 4 main ways you may profit from this halving. We can buy Bitcoin from a cryptocurrency exchange, like Binance or Coinbase, for example. Bitcoin increased by 8 times to its peak in 2021. We can buy another cryptocurrency, like Ethereum. Last Bitcoin halving, Ethereum gained more than Bitcoin itself in the following year. It increased by nearly 20 times. We can buy a Bitcoin mining stock, such as Marathon Digital, CleanSpark or Riot Platforms. Their stock prices increased drastically after the last halving. Marathon Digital by more than 90 times the following year, CleanSpark by 8 times, and Riot Platforms by more than 35 times by the end of 2021. Or we can now buy a spot Bitcoin ETF, or a Bitcoin futures ETF to get a piece of the action. In the United States, they were not an option until 2021. We are all hoping to profit from the halving. But remember that past performance does not guarantee future rewards. Although we all hope it does.